The day is finally here, the one that many was waiting for. So the Fed will start weighing the tension between bringing down inflation and financial stability risks. So this section is a ball and chain for Fed. In a longer term horizon, 6 to 12 months, this terminal rate can't be above 5.5%, many say, as that terminal rate was similar, in similar terms, was back in 2008, right after. We all know what happened. So the Fed is aware of breaking something, and the economy is going to possibly slow down if the terminal rates will become too high. So the past couple of days has been under the sign of a rise on the many markets, but may they persist in their bullish tendencies right after this Fed's meeting will take place. That will what we'll cover today, and that's something we need to ponder over. And I have also very interesting news regarding the future price of Bitcoin, so make sure you will be staying with us. So let's begin. Alright, and the economy view is the first block that is leading us to banks rates division. As you can find that many market participants is trying to tip the right Fed's decision. And among them, there is a Bank of America with March meeting call at 25 basis points hike, Barclays, Deutsche Bank, JP Morgan Chase, Morgan Stanley, and Nomura also share that point of view, whereas Goldman Sachs and Wells Fargo expects a pause. And that's what also many others market participants is finding that may happen. That's a Fed probability rate. I will show it in a second, just let me find it out. So Fed probability rate right now at CME Fed Watch tool, bear with me, is at 450, 475. It means the pause with a 12.2% probability rate, whereas the other bets are at 0.25. That's why this trajectory should lead us to the conclusion where this pivotal moment might be seeked somewhere in the vicinity of the end of the first half of 2023. So it looks like the market may be going too quickly for that pivot time, as we all do know that it takes time. Usually it takes many months before a possible pause to a pivot, whereas the market assessing that availability this time to happen much more quickly, as something may crack along this the economy. And you may also take a point of view in the comments section below the video or in a chat that is going live. I'm very curious of your stance. So that's what the market is betting for, whereas we also seen that many of Bloomberg analysts has bet mainly for at 0.25 hike. What will the crazy dot plot look like? So historically, pivots have come after many months after the stop, and I do expect it need to be reassessed. So sorry, I haven't switched the windows. It need to be reassessed, as I mentioned, this pivot may take a bit longer, but it depends on what the Fed will do. As we all do know, that the Fed is data-driven, so this changes, this economic outlook may evolve on a daily basis. That's why I wouldn't really stick around to this one. We will see another dot plot on this March meeting, and it will be updated in tomorrow's episode. So for Fed, definitely bringing inflation back to 2% is the one of the elements non-negotiable. Also, what ECB told that for them this heightened inflation rate is one of the biggest threats for the economy as a whole. That's why they cannot neglect this. So the very possible scenario is that where Jeremy Powell will express confidence in rising its interest rates back to 0.25%, also justifying that the market is still in a good shape, and there's no worries or anything. So for now, I do expect that this decision, this stance will be under the dovish sign, rather much more hawkish. But also, inflation rate would determine even 0.5 hike, as we do know that PCE, the gauge that Fed is watching very carefully, has recently surprised and doesn't lower as it's supposed to. So it means that that inflation rate being neglected may impact also indirectly the US debt held by the public, that throughout recent years has skyrocketed, and it's expected to rise in a even more aggressive mode. So what are the problems, you may ask, of raising debt? US issue is that debt has been increasing faster than the country's economic growth, and also the US might become a fiscal hostage of China and Japan, which could potentially use their holdings as leverage in diplomatic or economic negotiations with the US. Also, something that maybe of a bit of a bother to many analysts is that that may even lead to a higher inflation and devaluation of US dollar, that is a global renowned currency for trade, and devaluation of it may come with another outflow out of this globally important currency. So that would possibly suggest Fed is going to don't really pave a way out of its trajectory they already decided to follow, and that's what also brings over some concerns of that possibly interest rate hike decisions. All right, so as a next element, that will be a market outlook, and for this one, I want you to switch over your podcast to a much more visually conceptualized form. I mean, in a trading view. So for this, I will guide you through the most important US index, that's S&P 500. So today we have opened at a loss, so we are right now correcting this recent very strong move, but in a longer time horizon, it's still possible to correct and fill that gap that has been established at 39.5 and 39.7. But in a longer time horizon, I do expect that SPX will follow the north guidance than otherwise. So SPX is right after this liquidity grab stoppage been set at 3800s right now, climbing up at the wall of worry of many of those that were betting for prolonging banking crisis, but right now those fears are getting to be faded. So that's SPX, and that's my few cents on that topic. Right now we are jumping over to next section, that's crypto outlook, and that's very interesting findings that what we can find is based on thesis that history likes to rhyme. So BTC rise dominance is similar to that from 2019, and that's what I will show you in a second. BTC.D, if you wanna just look it through individually. That's the chart on a daily basis. We can find that we are right now, or maybe switch to weekly one. So back in 2018 and 2019, we've seen such rally upwards that we could find being at first it was a kind of a relief rally on 2018, also converged with a rebound at a significant scale that literally ignited a forthcoming bull market, whereas was it 2018? No, sorry, it wasn't 2018, this one, but what I meant was that one out of the April of 2019. That's what ignited the bull market, whereas that one was the one of a sell-off on the market, also accomplishing that bull phase of a cycle. So I'm getting back to this time of April 2019. We had right there in a dominance a rise of around 36%. Right here, we are still far from it, and we are right now just slightly touching a territory of 20%. If the history may repeat, we may see even a stronger dominance of rally, and that would mean and conclude with a hate rally on the altcoin market. So it literally means that most of the retail is stuck in alts. BTC may gain upon second quarter of this year, and it may even extend in time for sometime in the quarter number 3. So any stronger BTC correction would mean a blood on alt. So it means there will be shakeouts on the way. That's why don't over leverage yourself. So only from price perspective, it's starting to look a lot like 2019. But for those that were keeping the altcoins back then, it will after this first wave of euphoric tendencies, it would mean as a consequence rather more painful scenario, where during this kind of a turbulent time, it's most practically more practically to hold Bitcoin rather than any other more risky tokens. So this corrections upon the way may lead us on a Bitcoin back to somewhere in the adjacency to 25k, 26k range, which might lead to most alts making new lower highs. Also, this BTC dominance might be even more pronounced by the ETH BTC pair that's as the coming Shanghai fork is coming the next month. So the fact determined my thesis is that the unexpected or expected for analysts supply shock may determine an unlocked ETH tokens that may be load off from a structure. Right now, let's jump to very interesting. So it's yes, that's the correlation I've been talking about between that what happened in the past and what happened in the first quarter of 2023. So BTC dominance was at orange, whereas Bitcoin price was at blue one. Interesting finding is at right here, the one that's coming out of the option contracts. Right here, you may find that there was a naysayers wave that's finding out that that Bitcoin might be exceeding 1 million bucks in price in 90 days. That's what ex-Coinbase CTO bet has made, and that was the one very, very loud one when it has told that he's betting 1 million bucks for this one, that it may eventually come true. So the odds for him are 1 to 40. So I would call him an extravagant one that is trying to keep the attention of many social media channels. But it will be very interesting to watch anyway. It's always a I would say kind of a interesting fact for all of the I would say spectators on this social media platforms. So is it possible? The question is. The real answer might be hidden in a option contracts. Just jump over once again to the finding that my team has got to. So with these forecasts of Bitcoin being worth $1 million, there is one problem. One problem is that even though this hyperinflation, financial collapse of fiat system and pivot may come eventually, we may see elements that right now don't justify such bet that may come true anytime soon. So implied volatility, if we just jump over to Bitcoin futures for December of 2023, implied volatility is at 61.18%, and it's a one of the basis factor that will help me and will be auxiliary for for the findings and for the results of the findings regarding the option contracts and the one that may point where this Bitcoin price may get us to within next 3 months or even up to 1 or more years. So when taking in consideration that according to what have been attached right here, implied volatility at 61% leads us to 3.19% implied volatility daily, and in a conclusion, it gives us over for Bitcoin at $1 million, it would bring us to at over 3,500% volatility then within 3 months, and that would expect with 39% daily. The problem is the biggest crypto options exchange doesn't list such an option for this one to verify what might be the probability out of that 1 million bet. The highest strike price is 100k per BTC with delta at 0.08. Using simple rule of thumb, it gives the probability of tapping the 100k at 4%. So what about reaching the lows of 2022 again? Well, it gives around 8% probability. So this deviation is rather betting for reaching new lows than 100k dollars within next couple of months. So I would say there will be many naysayers that may tell many things in the media just purely out of the marketing their own images standpoint. So I wouldn't really stick around to this and just be more pragmatic and just look for the real data, not the one that comes out of the hallucination of many that are just purely trying to gather an attention. All right, so that was about Bitcoin and altcoins. Right now, let's head on to market mover section. As a reminder, we are live, so if you have any questions, just pose it. I will get back to them any time soon. All right, so for market movers, I will jump to trading economics, and we have obviously at 1 p.m. a Fed interest rate decision. So that will be the event that may imply the highest volatility upon the next couple of hours. And tomorrow we have Bank of England rate decision that, as we do know, after this very high inflation rate, that's very interesting what Bank of England may do. So Great Britain after this Brexit is in a much more turbulent situation than CBOE, and what I would expect, even consideration of hiking interest rate further. But on the other hand, the banking system in the UK is also under the threat of other cracks getting more visible. So similar to Fed, but even in terms of Bank of England, it may get even more stronger. That this been crossed under the or been under the parting of the ways will be the thing that may be a head scratcher for analysts, and I'm very curious of how it may eventually go. So that's when looking at economic calendar for upcoming 2 days. We also have inflation rate from Japan that will be worth watching. In terms of earnings calendar, what we had yesterday was Nike that surprise to the upside. So it's for many of those of the proponents of value stocks. That's a very good information. Whereas today we have Woodside Energy Group Limited and Chewy to publish the data. On Thursday we have Accenture, General Mills, and Darden restaurants. So at the end, as always, we have market movers. So let's find out what. Sorry, I had to switch. The windows. Right now, let's get on to the next section. That's a trade idea 1. So in terms of trade idea, I'm betting for the possible interesting chart or the scenario to play out. And for this one, I want you to jump over to a trading view, and the one that I want you to study right now is this US 100. US 100 right now is right in the vicinity of its medium-term highs at 12.89. Right now, we are negating the eventuality of coming back lower, below this highs at 12.67, and we are with a market open right now, heading towards possibly another highs being set at over 12.76. Very important for the market right now is overtaking the recent highs, but otherwise it may restrict a possibility of a further sell-off. So right now the market's eyes will be turned to the eventuality of getting through that roof at 12.72. If we manage to this will be an opened road to 12.88, but on a daily standpoint, that's one of the roof that should be crossed right after this recent ceiling being taken over. So for me, I would wait for a little longer for the result of this Fed's meeting. If we manage to get out and close our hourly candle above 12.76, it would give us possibly a rally toward another congestion zone of 13.15 around. So in my view, it's more likely that the US 100 will remain its current tendency, but for this one we may build up some form of consolidation that will gives us a power to hike in this valuation terms. So On the other hand, I do expect that if we won't manage to get across this highs, another very strong demand zone should be set just within this volume profile zone of around 12.51 and 12.59 hundredths. It's 125.94 and 125.23. So that's where the possible chance to join the trend might be set. So you may set alarms right here, as I did. So so that's it in today's episode. Thank you very much for being with us. For the next episode, I'm inviting you tomorrow at 8:45 a.m. East time exactly. So have a great afternoon, and tomorrow you will get updated of what Fed delivered in details. So